Welcome back to Alpha Recap. I'm Morgan. Quick heads up before we jump in. This episode was recorded after the market close, and as always, if you have questions, you can reach us at stockalpha.ai. Today, we're unpacking a big strategic move in AI hardware and the broader market rotation that showed up alongside it.
Great to be here. Lots to talk about. A big platform making a big bet, foundries stepping into a new technology, and a market that finished the day pretty split between momentum winners and cautious institutional moves.
Let's start with the headline. NVIDIA announced a $2 billion strategic investment in Marvell and an NVLink fusion partnership that explicitly centers on silicon photonics and optical interconnects. Marvell jumped about 11% intraday. So, what really stands out here is
the scale and the signal. $2 billion from a major platform player is not just capital. It's conviction that optical interconnects matter for exascale AI infrastructure. Analysts are reading this as a directional bet that high bandwidth, low latency optical links are central to next generation data center design.
Yeah, absolutely. Samsung also confirmed its foundry entry into silicon photonics at OFC 2026, joining TSMC and Global Foundries. Why does foundry participation change the story?
Foundries historically determine volume economics. When multiple top-tier foundries sign on, it points toward a path to scale, and scale tends to compress component prices over time. But when you step back and look at this, the wrinkle is integration. Foundries can make the photonic dies. Packaging, alignment, thermal challenges, and system co-design are a different, harder problem.
Right. And the other thing is, co-packaged optics, or CPO, is often described as putting optical transceivers right next to the switch ASIC to save power and latency. Explain that in plain terms for listeners.
Sure. Think of electrical traces as crowded city streets. They get noisy and slow as you push more traffic. Optical links are like express trains that move large amounts of data farther and faster. Co-packaged optics brings the train station right next to the processor, so you avoid the long, power-hungry commute. But building that station, aligning lasers, managing heat, and integrating software and hardware is really tough at scale.
So the market reaction, Marvell up about 11%, reflects hopes that the integration piece will land sooner for firms tied to platform vendors. But there's a debate. Commoditization versus integration.
Exactly. One camp says once foundries like Samsung and TSMC ramp photonic dies, those dies will commoditize and margins will shift to higher level integration. The other camp says integration remains scarce. Optical engines, packaging, and the software-hardware interface will keep margins with integrators and platform partners, at least for several years.
Honestly, I was a bit surprised by this one.
Yeah, that tracks. The timeline matters. Samsung's public CPO roadmap stretches toward 2029. So there's a multi-year window where integration specialists could capture disproportionate value, even as foundries lay the groundwork for volume production.
Let's pivot to the rest of the market backdrop. Today showed thematic dispersion. Momentum winners like Tesla finished the day up about 1%, and Robinhood has rallied sharply since a media mention, up roughly 48% from that mention and about 57% year over year. Then we had an earnings miss at Cheji Holdings, non-GAAP earnings per share of 7 cents, missing by about 15 cents, and revenue of about $425 million, missing by roughly $39 million.
Those are great examples of market bifurcation. Momentum and narrative-driven trades can run hard, and we saw that, while fundamentals and macro signals were nudging some institutional strategists toward defense. Morgan Stanley recommended a tactical shift toward more cash and US Treasuries, and data showed Americans paid about $8 billion more for gasoline this month, which is a real immediate headwind for discretionary spending.
That gasoline number is striking. How does that feed into the broader picture?
Higher gasoline spending means less money for other goods and services, which matters for consumer-facing companies. Analysts noted that names like Nike could feel pressure if the consumer cutbacks persist. So while some pockets of the market were celebrating momentum-driven gains, macro signals gave reason for caution.
We often talk about time horizons here. On one hand, you've got long-cycle infrastructure bets like Silicon Photonics with multi-year roadmaps. On the other, short-term earnings misses and headline-driven rallies. How should listeners think about those differences?
Separate horizon from exposure. Long-duration infrastructure investments are about technology adoption curves, supply chains, and platform lock-in. Those require evaluation of roadmap, partnerships, and execution over years. Short-term momentum plays are often driven by sentiment, media mentions, or single-quarter beats or misses, and they can be volatile.
Quick reactions.
Right.
Wow, big pop.
And to add to that, event-driven and small-cap investors need to watch filings and 8Ks closely. Today's recap flagged a set of smaller disclosures from companies like Odyssey.ai, Quality Industrial, and Battalion Oil related to unregistered equity sales. Those are the kinds of moves that can create dilution or governance changes quickly.
Let's make this practical. Who are the different investor types, and what did today imply for them? Informational only, of course.
Infrastructure and tech-focused investors should note that optical interconnects look structurally important. Analysts say companies that can demonstrate scale and reliable integration, co-packaged optics, optical engines, and switch pairing could capture outsized returns. Momentum traders should watch volume and cross-asset signals like treasury yields as potential rotation triggers. Income and defensive-minded folks might take Morgan Stanley's guidance seriously and watch consumer spending signals. The $8 billion gasoline squeeze is approximate risk. And event-driven players need to read filings for dilution or guidance changes.
Okay, we've covered the big technology story, the market split personality, and the macro overlay. Before we wrap, what are the main points analysts agreed on, and where did they diverge?
Agreement. Optical interconnects are strategically important for AI data centers. Foundry entry will change supply chain economics, and integration is the harder, higher-value technical problem. Divergence centers on timing, how quickly photonic dies will commoditize versus how long integrators can hold differentiated, high-margin positions, and whether current momentum trades are sustainable against rising consumer and macro risks.
Quick takeaway bullets for listeners. Keep these in mind as you review your own research.
First, distinguish exposure by technology layer. Photonic die suppliers, integration and platform providers, and systems integrators, because each faces different competitive dynamics. Second, watch partnership cadence. Platform investments like a $2 billion strategic stake can signal preferred supplier relationships. Third, monitor macro signals that could flip risk-on sentiment, consumer spending, earnings cadence, and strategist positioning to cash or treasuries are proximate triggers. And finally, read filings carefully for dilution or customer concentration risks in smaller names.
Great. A few final notes. Analysts note that the NVDA Marvell move signals a nearer-term path to commercial scale and potential supplier preference, but the structural debate is unresolved. Commoditization of photonic dies seems likely over time, while the integration layer could remain scarce and lucrative for those who solve it. Markets closed mixed today, with pockets of momentum and a simultaneous defensive tilt from some institutional strategists.
To reiterate the important legal point, this discussion is informational only. It does not constitute a recommendation to buy, sell, or hold any security, and it is not personalized investment advice. Analysts note market developments and data to inform research and decision-making, but listeners should do their own due diligence.
If you want to dive deeper or ask a question about anything we covered, head to stockalpha.ai. You can ask us directly through the Q&A feature and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. I'm Morgan.
Thanks. And if you send questions to stockalpha.ai, we'll do our best to address them in upcoming episodes. See you next time.